I mean, I could go for a balanced portfolio, but I've talked more about retail most of the way along, so I will just buy an absolute #1 dominant major retail scheme in one of the big Polish cities, which I've seen some recent transactions. Złote Tarasy was just under that. There's other big schemes which come close to that, so I'd focus on that one big major scheme.
Okay, dominant retail scheme.
And we'll have a long-term sustainable future and we'll trade superbly.
Okay, good, thank you.
We'll fight competition.
Ben?
I mean, I kind of have to say this.
A lot of
but it's absolutely true.
Yeah.
No, I would, there's definitely, and it's probably a 3 to 5 year horizon, but there's definitely a big opportunity for big box, multi-tenanted, short lease term industrial, logistics, let's say. But only, I would say Poland in those 5 major markets, and probably the capital cities, including Bucharest, in the other markets. I would certainly not be putting it, I would not be trading long lease length for location, which is what's happening at the moment. I think it's extremely dangerous. So I wouldn't care about the lease length. I would be going for big box, and the more vacancy, the better. And also really prime capital city office, trophy buildings, small 15, 20,000 square metre.
Okay, good. Does that also, are there particular, is that across the region, or would you focus on
capital cities? So tertiary, I mean the secondary cities in Poland for that type of product, not so interesting, but the smaller buildings in Prague, Warsaw, Budapest, and Bucharest to a certain extent. 15 to 20,000 square metres, multi-tenanted, again, asset management play, but locations that are never going to become secondary. And obviously quality is extremely important.
Okay, good. Thank you. David, what would you do with my 500 million?
Well, I wrote allocate and diversify on the way in, and so I think we didn't talk much about Russia and Turkey, but I think any allocation strategy for the region would have to include healthy allocations to both those countries because of the GDP growth. And I would want to make sure, I'll just be controversial here, it's not new for me, and say that instead of betting on a big single scheme, you know, our funds typically would want, 20 assets, no one asset occupying more than 10% of the capital. So if I have 500 million, it means I can't afford an asset that's much more than 100 million, right? Because 10% of 500 is 50. And then I'd bring 50 of debt in, right? So I think timing the market and
Something you would like me to give you more money, David?
No. Timing the market and picking points is a tricky game, you know? I mean, everybody thinks they can get it right, and, you know, our track record isn't stellar, I mean, in our third fund. So I think you got to spread it around into multiple sectors, multiple assets, capital cities only, and you got to include Turkey and Russia.
Okay, good. Thank you very much. Thank you.